Hello, this is a quick update for the Japanese yen, USDJPY, so US dollar versus Japanese yen. And the intention here is to show a very simple and effective way to look at technical analysis. First, we are looking at the daily time frame. Make sure you're on log on your charting platform. This is TradingView. And we have a bear channel. A bear channel is a move in the market where there's a lot of explanations, and I'll try to maybe include one of them in the post that comes with this video. But the bottom line is once a price crosses down the bear channel, then that is a popular trigger that algos and traders are looking at in order to sell. And here we have a few touch points on the upper band. So we've got one here, one here, one here at the top of the daily. So we can, 3 touch points, we can draw a line. And then once we've got this touch point, we can also draw a line, but it needs to be parallel to this line, to the first line. That's basically defines the channel, or through it we define the channel. And we also notice internal lines or internal rails. I call them rails because sometimes there are more areas. So here, for example, we definitely have a potential one. Okay, so when we're here, for example, and we're looking at all the data that we passed, the historic data, then that's something to notice. This is a pivot point. And then once we come to it, because we do have this line once we're past here, and we've got this, and things are still not looking very clean, but we can definitely, because of this line, extrapolate and note this point. And then we're looking for this area. So, and even if we didn't trade that, once this bar happens, this is a big bear bar, okay, and it's a 1.73% drop in the USDJPY. So that is also a hint, because there's other algos and other traders, professional traders, that have reason to do that, and it basically supports this idea here that this was an important support that was already broken. There's a lot of stops being filled here and making the drop faster. Now, let's say we see that we didn't trade that, but now we're coming to here, okay, because we've got this, and we've got the line again that's defines the channel, you can say. Okay, so here we have to be on the lookout again. In this case, usually what we would have usually a jump up. Why do I say that? Because there haven't been a lot of touch points on the lower band of the channel. So once we have a drop here, we might be looking for lower time frames for a retest of that channel to see if it goes back or goes down. But if it fails to go back into the channel, then traders and algos will be fulfilling a prophecy, or making a reality, because they're ready for more selling here. Okay, that's why this has happened. That's why technical analysis works. Okay, because, for example, if a stock price shoots up to 100 and people think in round numbers because we're humans and they want to sell at 100 and not at 117.52, then that herd mentality and that belief increases the chances that reality will happen. And same with setups. So the setup here, people once algos and people seeing that it's not bouncing and dropping, and the retest didn't make the price go back into the channel, then the reward versus risk to bet that there's more downside is greater in our human minds and in our technical analysis community know-how, or communal know-how. So when I say there's a better reward versus risk for playing short here, once the price did not enter the channel, so traders can, for example, and algos can even take their short being here at 134.85, for example, above this candle of 29th of July, and they can go for a much better reward on the downside, betting that it will continue still to go down because of other things that they've learned. For example, measured moves. Measured moves is some will take from the top through the middle of the break line, and we'll get all the way to around 128, 127, which is also this area again, testing that area and perhaps creating a double bottom there. So some of this might have been a little bit too technical for some of you, but the bottom line is, even if you want to look at a very simple map and guidance, and nothing is 100%, no one knows for sure, but we're like detectives and we're looking for signals, then the bear channel can give you that guidance. And once that the price is broken down from this bear channel, there's more downside risk. If you're holding the USDJPY on a long, then it's something you definitely want to notice. You want to do this on time frames that are popular. That's why here I'm showing it on daily time frame, and trade the USD Japanese yen at your own risk only. Come back to Forex Live technical analysis for some interesting, hopefully unique perspectives that can help you better understand and perhaps sail the market. And have a good week. Thank you.